Starting.
There we go. There we go.
Okay, and welcome everyone to slight 5 minutes late. Normal technical hitches. Singing Vielle, Google Hangout, Friday 13th, 2017. Okay, so we have in Big Hangout we have Dale Henry, who's over here. We have Richard Wolfred over here, and we have Graham Woodall over here, and here's me, Neil Singer. Okay, so what we thought we'd do is we'd run through a few topics very quickly. If anybody wants to join the Hangout, if you send us an email, we should be able to join you quite easily by sending you a code. So let's talk. First of all, I'm going to start. Let's talk about what happened in 2016. So 2016 ended up being a pretty good year for us, actually. We found as a business that our volumes were extremely high, and we found that we were selling a property every Okay, so we found that during 2016, we were selling a property every 5 days. In the run up to the end of the year, between September and the end of the year, we found that our volumes increased dramatically, and we were selling a property every 3 days. Now, it's worth just showing you a couple of things. I think I'm going to share a screen with everyone who's watching, and let me just show you. If I can share my screen with everyone. How do I share a screen? Share a screen. Here we go. Share screen. Okay. Let me show everyone a couple of things. So this is our website, which everyone knows. In terms of our volumes last year, you can see here the volumes that we were selling. So throughout December, November, October, September, etc. You can see high volumes of sales. Now the question is, how do we achieve this? Well, we achieve this because we have got a very large database, and we're very highly ranked on Google. In terms of our market reach, the people who are interested to see how we actually managed to sell so many properties, we had an average of 1,100 page views a day at singerviellesales.com. And the highest number we had was on the 27th of January. We actually achieved, and I'm showing you here at Google Analytics, we achieved 3,397 page views in 1 day. And the reason I wanted to show you the Google Analytics is so that you can be sure that we're not making it up. And in terms of other things that happened to us last year, we carried on extending our world reach. And in recognition, the big thing for us last year at the agency was we created a multi-language website. So we launched this at the beginning of September, and it was really in recognition of our international audience. We get about 20% of our traffic from abroad. So I just want to very quickly give you an example on a particular property. This is a building which we have on the market at the moment in Greenwich, and here is the property displayed in English. Same property in Mandarin, same property in Arabic, same property in Hebrew. So these are examples. So the reason we do this is simply because it's about engagement. If you have someone in Dubai and he's got a property for sale and it's in Arabic and it's in English, what's he going to be naturally drawn to? So he's going to be drawn to the one that's in Arabic, in his native language. And if they contact us, we've got translators who will respond and go from there. So that's what we do. The other reason is, how did we achieve such high rankings? Let me show you again. I'm going to show you another. I want to share with you another screen. Google Analytics. This is our rankings on Google, and a couple of examples for you. So this, for example, if the words investments for sale, you'll see Singer Vielle ranked #1. We're ahead of Savills, we're ahead of JLL, we're ahead of Knight Frank. Here's another example. Commercial property investments, #1. #1 on the map. Look, in London. #1 on the map in London. Here's another one. Investment properties for sale UK. Singer Vielle sales #1, ahead of Savills again. Allsops, Knight Frank. That's what we do as a business. In terms of our reach, you can see why we've been so successful. So that's very quickly what we managed to do last year. We had a good year. I know a lot of the markets seemed to see a slowdown. We didn't actually experience that. So that is a quick rundown of what happened last year. If I pass over to Dale, perhaps you can be the first to talk about some of the properties we've currently got in the market. Just a quick overview. Would that be helpful?
Sure. Yeah, let me start by running you through a property we have in the market, if I can share my screen as well. There, can everyone see that? So, oh, yeah. Okay, so this is a property we have for sale in London, in Greenwich. You'll see from the video that the property is in a very prominent position fronting Trafalgar Road. It's next door to an Iceland supermarket, less than half a mile from Maze Hill Station. So it's a very good prominent position in Greenwich. And the property comprises a ground floor retail unit totaling just under 1,000 square feet. It's entirely let to Ladbrokes Gaming and Betting Limited. The lease is for a term of 10 years from May 2012, and Ladbrokes are paying a rent of £35,000 per annum. As you'll all know, Ladbrokes is an extremely strong covenant. They are showing profits of £50 million, shareholders' funds of £1.95 billion. And in October, they merged with Gala Coral to become the leading British bookmaker. So on this one, we're asking £650,000, which is 5.12% net initial yield. The next property I'd like to show you is another southeast retail investment in the heart of Reading Town Centre. It's situated midway between the railway station and Broad Street and the Oracle Shopping Centre. And this comprises a ground floor retail unit of 1,000 square feet, let to Doan Brothers Cash Betting Limited, trading, as you'll see, as Betfred. The lease is for a 10-year term from October 2012 at a rent of £70,000 per annum. Due to the location, the property could also lend itself to A3 use in the future, subject to planning. Again, Betfred, extremely strong covenant. It's the largest independent bookmaker in the world, with shareholders' funds of £132 million. And there's no VAT payable on this, and we're asking £1.2 million, which is 5.5%. The third one I'd just like to let you know about before I pass over to Richard, who will also just mention a few other properties we have for sale, is this industrial investment we have for sale in Dartford, which we do currently have some interest in. It's still available. And this is situated in the highly established Crossways Business Park, right on the M25, close to Blue Water Shopping Centre. Other occupiers on the park, you've got Lang O'Rourke, Kerner Nagel, HSBC, John Lewis. The property forms part of Schooner Park, which is a development of 24 warehouse units, and it's let to an established tenant for 10 years from December 2010. We're asking £625,000, which is 7%, £164 a foot. Investment value is pretty much underpinned by the vacant possession value. So I'm going to pass you over to Richard, who will just run you through the other properties we have available.
Hello everybody, good afternoon. Just carrying on from Dale's overview, I'm also going to talk you through some properties that we are marketing. The first of which, I'm just going to share my screen with you, is in Swansea on the Carmarthen Road, which is the main arterial route which links Swansea city centre to the M4 motorway. It is a very prominent roadside retail scheme that is let to 3 tenants: Majestic Wine, Domino's and American Golf. Majestic and American Golf have actually been in occupation since 1999. So been in occupation for some years, both trade very well. The middle unit is let to Domino's Pizza, who paid a £20,000 premium for a new lease recently, and they're also trading from a brand new or a newly refurbished unit, which presents very, very well. The site itself is 6.7 acres. There's 35 on-site car parking spaces, and this property is currently generating good interest. Following which, we are also marketing a multi-let retail parade in Wakefield. We sold the Wilkinson's unit next door in December at a yield of better than 7%, and now we're trying to sell the freehold interest in 6 adjoining retail units. There is a designated city centre car park directly behind the property. The freehold interest is for sale at a quoting price of £800,000, which is a high net initial yield of 10% and a capital value of under £60 per square foot. Finally, we've also just brought back to the market a multi-let industrial and office investment in Swindon. This is called Gemini House. It's in a strategic established commercial location. 40% of the income is secured to My Optique Group, who people will probably know better as Glasses Direct. Glasses Direct is the largest online opticians in the market. They have recently had a break option, which they did not exercise. They are very much wedded to this unit in this location. The rest of the property operates as a very successful business centre with an excellent letting history. Vacancy is few and far between. It's very well managed by an on-site manager, and we are quoting £1.25 million, which is a high net initial yield of just under 13% and a capital value of £35 per square foot. That concludes my overview, and I'll pass you back to Neil.
Okay, hi. Hello. I think I'm not muted. Right, we're going to try bringing Graham in for a quick overview of the Scottish properties. Graham, let's see. You say something. Let's see if we. I don't believe you're muted. Are you muted? We can't hear Graham. You're muted. Oh, there you are. We can hear you.
Oh, can you hear me? Right.
Yeah,
okay.
If you want me to share a screen to help you, just.
Oh yeah, I'm going to try and share a screen. Watch this for a laugh. Okay, here we go. Oh no! What the hell is that? Wait a minute. No, does that work? No.
No. You see, no, yeah.
Yeah. Okay.
Would you like some help, Graham? Which property would you like a quick overview of first?
Grangemouth.
Grangemouth.
Yeah.
Yes, that well-known place north of the border. Right, hold on a minute. Let's try.
Right, come on, you can do it.
I can do it.
Because I can.
There we are. Can you see it?
There we are. Good. Well done. Yeah. This is really the only one I want to talk about, because Blantyre, which is the other property we've got in the market, was due to conclude today, but the solicitor's gone down with
This is where Graham gets his hair cut, no doubt.
Yeah, they're going out of business. No, we're due to do Blantyre today, but the solicitor's gone down with flu. So Grangemouth, we are relaunching today at a revised price of 2.6 million. It is anchored by B&M, who've just reported record sales over Christmas. B&M are until 2025.
Can I just say, we've just lost 2 viewers, so we've got to. I don't know what's going on, guys. We've got to be more punchy.
Oh, come on. That's because you brought me in at the end. If you brought me in at the beginning, they would have stayed with it.
Yeah, maybe.
So look at this parade. It's got Greg's, Co-op Travel, Card Factory, Lloyd's Pharmacy, Betfred, 9.5% net initial yield, which I think is a cracking buy for somebody.
It looks very cheap to me.
And come and get it.
Come and get it. Right, looks very cheap to me. Fantastic. Excellent. Well done. Right. Stop sharing. Okay, so what's the next thing we'll talk about? We are going to talk about we're going to give you a tip-off. We're going to tip off the things that are coming to the market. We're not going to tell you exactly where they are, but we're going to tip you off so everybody can get excited. So the first person who's going to tip you off is Dale. Dale, what have you got for us?
Okay, I'm going to tip everyone off about we've got an industrial investment in Cambridgeshire coming up, which is let to a very, very strong covenant on a short lease. So it's going to provide some interesting asset management opportunities. Attractive lot size going to be about £500,000, circa. Hello, am I back? Okay, we've also got a very well secured retail investment in Norfolk coming up, let to the original factory shop with just under 14 years unexpired. The tenants just extended their lease. It's a rebase rent. That one's going to be about £820,000, 7.3%. That'll be coming up hopefully next week. Yeah. Hello.
Yeah.
Okay. And finally, we're going to have a retail investment in Wales, let to a 5A1 covenant with about 10 years of income.
Next.
We've invested very heavily in both software and hardware at Vielle, as you can see.
Right, let me try. We have been instructed to prepare a number of properties nationally, which have all been let on new leases providing 15 years term certain. They are all let to one undoubted covenant. They range in lot size from a few £100,000 up to circa 2 million, and we envisage being ready to provide information next week. I've also been instructed on another interesting town centre site with very secure income to a AAA tenant for another 15 years. This will be a lot size of under 2 million at a net initial yield of 7%.
Let's jump north of the border again. Bring in Graham.
Yeah, I can give you a tip for the 230 at Newbury. But the other ones, we're going to have a couple of city centre office buildings. One's multi-let, one's single-let. They're going to be very interesting opportunities, and they're going to be out in the next 2 to 3 weeks.
Okay, back with me. All right, so let's quick overview. So we've got a lot coming up. Keep in touch. What I want to show you, everyone watching now, is one new concept which we've brought to the market, which we're developing at Vielle. We recognise that whilst we are big sellers of property, we have an enormous list of private investors who are trying to access property. So we've decided that we will make available properties from the wider market, provide that information to potential investors. If you're an investor and you would like to understand, understand what's out there and what may interest you, please get in contact with us. We'll add you to a discrete list and we'll share with you information on properties that are out there anytime. So that is a new concept which we are now developing. Another thing from Vielle. Right, let's talk about predictions for the year. Can you talk about predictions for the year? Right, Dale, is your headset working?
Yeah, can you hear me?
No.
Oh, can you hear me?
Yeah.
Yes. Okay. Hello.
Go.
So Dale Henry is now going to predict the year.
My prediction. The general feeling, I think, post Brexit has been so far so good, which I think was clearly reflected by the strength of the market in the second half of the year, and certainly the very encouraging end to the year, certainly that we had and others may have had. I don't think there's really any reason at the moment that the market will weaken. Overall, the UK economy has started 2017 very positively. The equity markets are bullish. The FTSE 100 yesterday closed at a record level for the 11th consecutive day in a row. A number of retailers reported positive Christmas trading figures, and the property industry as a whole seems to have entered the new year with a degree of optimism. So I think people are confident about the commercial property sector's prospects. We certainly are. I think the confidence is reflected in the lack of supply in the market. And if anything, I think things are more certain and clear than they were last year. We're not faced with a referendum to distract us. We know that we know whether we like it or not that Donald Trump's going to be the next US president. So I don't think there's going to be any sort of seismic shocks in 2017, and I think there's a real reason to be optimistic. There you go. That's my prediction.
Great summary. Right, Richard, what's your view on What do you want to talk about? The residential market?
The impact of the huge reduction in sale volumes in the residential market and how that's affected the commercial investment market and whether this is going to change. I very much agree with what Dale has had to say. Nationally, house prices have continued to rise and revenue from stamp duty for the government has increased. So there is no possibility, in my view, of the government reversing the stamp duty. Despite what it may have done to the London property market, as say nationally, the residential market is very strong. However, due to the tax system changes in buy-to-let for buy-to-let investors, the commercial investment market has, in my view, without a doubt, benefited with more private investors seeking commercial single-let or multi-let properties to invest as opposed to buying residential. Some very big companies in the residential market have announced profit warnings over the last few months, and we expect others to do so. But from our point of view, in our space and our level of the market, we've seen heightened activity with supply not meeting demand, which we expect to continue this year.
Excellent, excellent roundup. Right, Scotland. How's Nicola?
Yeah, your pal Nicola and my pal Nicola. Well, Nicola's come out finally and said that she's not going to have a referendum this year, which can only be good news. And I think that there are lots of people looking to get their cash into the market, and particularly in Scotland, they see better value. Certainly sub £1 million. I think there are a lot of people looking for a home for their cash that will give them a 6, 7, 8% return. The issue is there's a lack of stock, and for any owners out there, now is the best time ever to get best price for your investments if you're looking to sell, because there is a big weight of cash looking to get in, and in that market, the referendum or the hangover of a possible referendum doesn't really have an issue. I think it has more of an impact on much bigger lot sizes, 10, 20, 30 million pounds, but for the moment, I think Dale's absolutely spot on. We've got a year, hopefully, of no referendums, no elections, and I think it's going to be good.
How's the snow?
It's not been too bad. We've dodged a bullet. I think we're okay. So it's good.
Okay. So lastly, me. I'm as everyone probably knows, I'm fascinated by technology and prop tech. So what's happened in prop tech recently? Well, actually, not very much. There's some new companies being backed, I've noticed by reading the various prop tech journals, but there's nothing that's really significant. However, I think things are going to change enormously. There was an article today in the Property Industry Eye regarding a report by Begna's Traynor. Begna's Traynor has said that nearly 3,000 estate agents across the country are in financial distress. And that's a huge increase on last year. 980 firms in London are in financial distress. Now, when people are in financial distress, they try and understand why, but they look for new ways of trying to make money. The reason they're in financial distress is a number of things. Particularly in London, of course, there's the stamp duty hit, and the market turnover has gone down. But the nature of agency is changing, and the nature of the high street agent is changing. And it's no good, in my personal view, looking back and thinking, oh, things will get better. They won't get better. The growth of Purple Bricks, Easy Property, eMove, Yopa are growing at an extraordinary rate. And if I was selling my house, what would I do? Would I employ someone and pay 1.5% to 2%, or try for £1,000 on Purple Bricks? It's a no-brainer. And these firms will have more and more an impact. And as they have more of an impact, the established agencies will turn more and more to technology. And I think that's what's going to happen. So I think this year there will be an enormous change. And there's something very big coming, but I'd like to talk about it, not in this Hangout, but I'll talk about it in the next Hangout, because I think we've been talking long enough. So that is it. We hope that's been helpful. If you're interested in any of the properties which we've mentioned that are coming up or are currently on the market, let us know. If you want to participate in the Google Hangout, we'd be only too delighted to have guests. We'd be only too delighted to cover topics. So don't be shy. Send us an email and we'll put you down for the next Google Hangout, which will be in 2 weeks today. 1 o'clock, 2 weeks today. So we'll speak to you then. So that's it. All right, we're all done?
Ciao.
All done? Ciao. Ciao. Okay, have a good weekend.